Hello everyone. Let's discuss what we can expect next week, that is July 1st week in terms of Indian market, to some extent about Nifty, a week ahead video. As usual, I like to discuss this in three topics. First, short introduction about what happened last week, then what we can expect next week, what open interest data is conveying, and what's the weekly technical analysis, etc. And finally, what are all the some important economic events that we need to look out that will have potential influence on Indian market. So without delay, let's get started. First, in short, what happened last week? Monday and Tuesday, lot of foreign brokerages like Bernstein upgraded the Indian private bank rating and target. Then in addition, Morgan Stanley bought Axis Bank share for over 2000 crore rupees, which all supported the Nifty index. And in fact, on Monday, overall market was also slightly flat to positive, but on the evening, SEBI released the statement that they were scrutinizing the Quant mutual fund for the possible front-running issue, which in turn started to affect the broader market on the negative side. So in the next all 4 days, more number of stocks were declined than that advanced. However, it didn't stop the Nifty rally. Then on Wednesday, Reliance supported the market because of favorable telecom auction. Then on Thursday, IT stocks pushed the Nifty up, and I think it's just a monthly expiry day short covering, nothing else. And finally, Friday, Jio hiked its mobile subscription plan between 11 to 22%. So Reliance supported the market. However, on the negative side, banking stocks dragged it down due to profit booking. Hence, on the weekly basis, Nifty increased to 2.2%. Bank Nifty underperformed as it increased only 1.32%, whereas Sensex increased 2.32%. So basically, large cap supported the market, and thus Nifty crossed the psychological 24,000 mark. Individual Nifty 50 stock wise, Ultratech Cement was the top gainer, increased near 10% as their board approved the acquisition of 22% stake in India Cements. On the other hand, for some unknown reason, IndusInd Bank was the major loser. They lost above 4%, followed by Cipla just below 4%. Then Eicher Motors and Tata Steel lost around 3%. Institution-wise, FII was mega net buyers. In 1 week alone, they net bought for 13,300 crore rupees, whereas DII also net buyers, but they net bought for marginal 530 crore rupees. So that's all about what happened last week. Now let's move to the next topic. Just for info, last week was the end of official Q1 FY 2025. Hence, this upcoming week we can expect some top brokerages might release some companies' earnings report estimates, and that can affect that particular company stock price. So there are two local uncertainties added this week. One, earnings related uncertainties, and the second, budget related uncertainties. Last week, our finance minister had the consultation with various departments, like what are all the things she has to consider and allocate in the budget. At present, there is no definite budget date, but there are speculations possibly it might happen on 23rd and 24th July. So till that time, we will have budget related rumors and nervousness, and so we can expect market to react for it. Anyway, coming back to Nifty, if required, please pause and have a look. This table is the future market open interest position. Here, we can divide this into two. Retail traders, DII and proprietary traders, those three on one side, who hold majority of their open position, 62 to around 67% in short positions. Whereas on the other side, it's just FII alone. I have been doing this pre-market analysis for the last 2 years, and I never saw FII holding this much quantity on the index long position. At present, FII are holding 87% of the index in their long position. Only 13% of the index future they shorted the market. See, I have no idea how all of a sudden FII turned as positive on Indian market. Anyway, it is what it is. Based on future market index open interest data, Indian retail traders, DII and Indian proprietary traders all shorted the market thinking it might fall down. But FII now thinks that the market will go go up, so they bought lot of index future. Then if we analyze the options open interest data means, compared to last week, the number of call option open interest increased 1%, whereas the number of put option open interest decreased by 9%. And if we analyze further, the retail traders mentality is still the same as last week. In both call option and put option open interest, there are more number of sellers than more number of buyers. And FII status also same as last week, more number of buyers than more number of sellers. However, proprietary trader just turned into sellers then of a buyer a week ago. So in simple, DII and retail traders more sellers in both call option and put option, meaning they expect the sideway movement. Whereas FII more call option buyers as well as more put option buyers, meaning again they're expecting a breakout on either side. And combining the future open interest data, it looks like FII expecting the breakout in the upside. Coming to technical, as we discussed last week, Nifty increased 4 out of 5 trading sessions, and on 2 days Nifty closed above 24,000 mark. So on the weekly chart, Nifty formed a long green candle with upper shadow and minor lower shadow. Here, if the upper shadow was long means, then we might say sellers in the upside. But the formed shadow was more of a medium one, and if we combine the June 3rd week candle together with the 4th week candle means, then it formed an bullish engulfing pattern with 6th week continuation of higher high formation. Technically, all indicates still buyers controlling the market. And here, 24,000 mark is very crucial. As long as Nifty trades above 24,000 mark, it will march towards 24,200 and 24,500 mark. Coincidentally, 24,500 mark is equivalent of 23.2 PE ratio. As I said in the last general video, in the last 2 times, market did reversed on 23.2 PE ratio. So again, if market crosses this 23.2 ratio means, then the next resistance will be at 23.5 P ratio. On the other hand, failure to hold 24,000 mark, the immediate support will be 23,800 and the strong weekly support will be 23,200 mark. Then coming to final topic regarding the things to look out. For India macro perspective, it's just PMI data and auto sales data. Both were more of a sector influencing macro than that of a broader market one. However, globally on July 2nd Tuesday, possibly during our market time itself, US Fed chairman is going to deliver a speech in European Central Bank, like what's Fed's direction about the interest rate cut, etc. Then on Wednesday evening, last Fed FOMC meeting minutes will be released, and then on Thursday night, UK election results will be announced. These are the key important items we need to keep an eye out this upcoming week. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.